implementing them without even, so we first did a discussion in which we laid down certain draft rules as to how it should be done, and they tested it, they gave us the results, and we checked it as to whether there is actually correct understanding, whether there is correct implementation, there is a uniform application across regulated entities. Only then we finalize, once we know that yes, people have understood it. That's the attempt. We start small, we make humble beginnings, we make baby steps. We started with NBFCs. When we did this ECL, again to put this in context, to take this example, before implementing it across the whole of the financial system that we regulate, we first tested it out on some of the NBFCs and made it applicable for them. We saw what its impact is, what the evidence is it helping us or it is not helping us? Is there a fine-tuning to be required? And so there is a lot. The question is a very, very relevant, valid question, and that is deeply discussed and debated. The language undergoes many iterations before it is actually finalized, and capacity building, as you mentioned, is again very important component whenever we try to move from a rule-based regulation to a principle-based regulation.
Thank you, sir. Thank you. That gives us a lot of comfort about the direction we are heading for. Yes, questions from students. We will start from this block. So please bring mics to this block. We can start with the girl student back there. And we will take questions from this block first, and then we will come this side also.
Good afternoon, sir. Thank you so much for an insightful session. I wanted to ask two questions. First being, you mentioned the concern of economic ratchet, where regulations keep increasing and systems become opaque. How does the RBI balance the need for stability with avoiding over-regulation? And the second question is, does the RBI plan to incorporate climate risk stress tests or green capital requirements in supervision? Thank you so much.
So we take, so depending on where the mic can reach easily, so here, you are there, so we will take 3-4 questions.
Good afternoon, sir. My question is how India can adopt to unconventional monetary and financial tools that work in pragmatic way without weakening the credibility or blurring the line with the fiscal policy, given the complexities of financial and monetary complexities that you have mentioned in your insightful lecture. Thank you.
Okay, so you are requested to repeat your question and also state your name. Introduce yourself with name and department.
Okay, sir. Good afternoon, sir. My name is Nishu. I am from Sociology Department, and my question to you is that how India can adopt to unconventional monetary and financial tools such as targeted long-term repo operations, forward guidance programs without weakening the credibility and blurring the line with fiscal policy. And sir, a very curious question from my side is that it would be great if you answer it. Should India revisit the inflation band for the inflation target framework that we have set to balance the price stability with the growth and unemployment, given in the complexity of financial and monetary ecosystem that you explained during your lecture? Thank you for the lecture, sir. Thank you, sir.
We can take one more question from here. We will. Oh, okay. There's a mic there. Yes, please go ahead.
Good afternoon, sir. So, sir, my name is Raghav Agarwal, and I am M.Com Finance student from Department of Commerce. So, sir, my question is, as we see that there is some decline in Indian rupee from last few years as compared to US dollars. Earlier it was something around 80, and now it is something around 88 to 89. So, sir, what is the basic reason behind the decline of rupee as compared to US dollar? And in future years, if we see the growth in rupee, so what is the basic reason behind decline of rupee?
Got the question. We take one more, and so we take one more question from here. Can you bring the mic here?
Sir, I am the final year student at Ramjas College studying economics, Apurva Anand. So, do you have any particular view on the continuous debate that goes around the components of inflation? There are like food inflation that also comes into this. So, do you have any particular view on that? And so, can you give any few tips on how to become the RBI governor?
Very good. So now over to you.
So I was asked the same question when I went to my own alma mater, IIT Kanpur. And so I said that, this is something that you can't actually going forward predict. So do your karma. And as Steve Jobs said, the dots will connect only, when you look backwards. Going forward, you will not be able, don't look, at the results. Do your karma, do your work, do it with passion, do it with hard work, the dots will connect. But on your question on rupee, so first of all, see, we do not target any level. Why rupee is depreciating is because of the demand. It's for the markets to decide, and so why the rupee depreciates is because ultimately it's a commodity, right? It's a financial instrument, and there is a demand for dollars, and if the demand for dollar goes up, rupee depreciates. If the demand for rupee goes up, dollar comes down, then it appreciates. That's the simple answer. But the underlying thing is, how does this demand change? And the demand changes because of the capital flows and the current account flows, both. So the recent depreciation that you have seen is because on the trade side, you have seen that there are some tariffs, some additional penal tariffs, as a result of which expectations have built up that our trade deficit may go down. Now, whether it will happen or not, because a lot of it depends on expectations, that is one. Exports did come down, as you are aware, in the month of October, so it's to do with current account. Similarly, on the capital account, you are seeing that the flows this time round, and that's been the case, right? So somewhat muted, as a result of which, but we are quite confident that there will be a good trade deal, hopefully, going forward, and that should relieve whatever pressure has been there on our current account. We have very good buffers of foreign exchange, 690 billion US dollars, and so that's not a matter of concern. Then there was a question on the inflation band. So we have, we have a band. We have a point target with a band. That band is to provide the flexibility, and the flexibility is provided because we have a very high component of food, and we have a very high volatility of prices, especially because of food prices. And so that's why we have a higher band, plus minus 2%. I would not like to give our view right now because the review is in process, and we will give our recommendations after we have done this. We have done the consultation and we have formed our view, and we send it to the government. It will be inappropriate on my part to give the views of RBI when this process is actually going on. Someone mentioned about the targeted the liquidity that was LTRO that was conducted for certain sectors, and its impact on financial stability, or on the fiscal, on the financial stability side, I think was the question. So see, primarily for this reason, that it can have financial stability consequences. Whatever liquidity was provided during COVID, it had an end date. And so whatever excess liquidity was given, that excess liquidity was sucked out. And so we are very mindful. As I mentioned to you, it remains the guiding principle, the main objective for us, the North Star for us, whenever we are taking such measures, but this is done only in exceptional circumstances and not otherwise. Then there were the first lady had asked some questions. What are your questions? Something on the economic ratchet?
Sir, like how then we can ensure that there is no over-regulation?
Precisely, that's the answer I gave, that you have to put in system a place that every 5-7 years I am going to, whether there is a need or not, I am going to look into those regulations and see whether you actually need them. See the evidence as to whether those regulations are actually now today needed or they are not needed. So for example, we had put in place a regulation which said that while there are exposure norms, you can't lend, a bank cannot lend, or even bank, even NBFC cannot lend beyond a certain percentage of their capital to any entity. So we have norms, which is called the large exposure framework. You cannot lend, because if you lend to one, you are putting all your baskets. So you need to diversify. So from diversification perspective, there is a large exposure framework. And on top of that came another regulation in 2016, which said that, okay, each individual cannot have, but as a system, the whole banking system together also cannot have more than 10,000 crore of lending, because at that point of time, you are aware there was a lot of stress in the sector. The health of the banks was not good. There were losses. SBI chairperson mentioned in 17-18 they were in a loss, and today they have huge profits. The total profits, I think, of the public sector banks itself is to the tune of about 2 lakh crore or something now today, and they were in a loss. When circumstances change, you got to review them. And how do you review them? Only if you put in process a systematic process that come what may, I'm going to review this every 5 or every 7 years periodically. I hope I answered your question.
Yes, sir,
Thank you.
definitely. Thank you so much.
Thank you, sir. So we will take some questions from this block. Before we start questions from this block, let us know up there in the balcony if there are some questions, so that we can have a mic sent upstairs. You are very satisfied lot. There's a question there. Okay. So please take one mic to the balcony. In the meantime, okay, so let's start from Rashid. Do you have a question? Then there's a question here. So you are closest to the mic.
Good afternoon. Good afternoon, sir. My name is Mahmood Rashid. I am a PhD scholar in Department of Economics. So you discuss about financial stability and liquidity coverage and regulation. So my question related to these. So there is a wide concerning widening gap of deposit and credit ratio, and also we see that so we see that there is a structural shift in the deposit composition, and how does RBI poses these challenges, because in the medium in the long run, because it raises the funding cost also, and also the term deposits. And
I think Rashid, just we got the main idea behind your question. So we go to another question.
Good evening, sir. I'm Avral Agarwal from FMS Delhi. You briefly touched upon how India has historically taken a very cautious stance on crypto and virtual digital assets, with strict regulations that we believe have driven capital and innovation offshore. With the US now moving toward a more innovation-friendly framework through proposals like the Genius Act, which is aimed at strengthening the global influence of dollar-denominated stablecoins, does the RBI foresee a re-evaluation of India's regulatory approach so that we remain competitive while also safeguarding the financial stability?
We can take one more question from there. Yes. So is there?
So my name is Surya Prakash from Department of Commerce. So Governor, back in 2018, when the US Federal Reserve attempted quantitative tightening, it created significant volatility in emerging markets, including India. So given the central banks globally are again navigating tight monetary policies, which specific lessons did the RBI learn from the 2018 episode to better insulate the rupee and domestic liquidity these days?
Okay. So the first question is the mismatch or the shift. I think what you mentioned was the shift that is happening from bank deposits towards other money markets or mutual funds, equities, etc. Now see, this is quite natural as our country progresses, and this is something which is natural. I would not say that it is something to be rejoiced. I don't know, because if it happens too quickly, then that's also not good, right? But certainly this move is towards more of equity, etc., more other markets. That's not a bad move per se, and it will happen as it has happened, across the world. It will happen even in our country. Bank intermediation over the years, if same trends will continue, and that will decrease the share of bank intermediation, not necessarily decrease the growth rates decrease the growth of the banks, because the needs are actually quite high. So the banks will continue to grow. Possibly the share thereof in intermediation will come down, but that's happening. But it's best happens if it happens slowly. And at the same time, the other thing is also happening on the lending side also. So a lot of the corporates and NBFCs are now moving from bank borrowing to corporate borrowing and market-based borrowing. So it's not only on the liability side, but even on the asset side, this shift is happening. So the point is that it should remain balanced. The second question was on crypto, and on crypto, you see, of course, US has now come out with a Genius Act. In our country, we have been promoting, number one, you are aware that our country is very different from the US in the sense that we have a very sound system of payments. We have the UPI, we have the NEFT and the RTGS, which the US does not have to the extent and scale that we have. So the payments problem, the domestic payments, the issues that they have is not there with us. But yes, we are promoting and experimenting with CBDC, because which is a crypto which is backed by the central banker, by RBI, and that's as an alternative, first of all, to payments within our country, and more importantly for wholesale payments and cross-border payments. So that is the second piece, with regard to crypto, and that's why we have a very cautious approach towards crypto, and because of various concerns that we have a cautious approach. Of course, the government has to take a final view. There is a working group which was set up earlier, and they will take a final call as to how, if at all, crypto is to be handled in our country. And then there were some lessons, every crisis, we learn lessons. It's a continuous affair for us as to how we learn from each lesson. And this journey that you have seen over the last few years, 7-8 years, the kind of measures that we have taken are all, in response to the lessons that we have learned through various crises, including the 2018 crisis that was mentioned.
We take, this is the last round of questions. We take a question from the balcony.
Good evening, sir. Good evening, ma'am. Governor, sir, I am Avitosh, first year MA economics student. My question is, from a student perspective, I am curious, what are the different future milestones or enhancements RBI is planning for Mule Hunter AI, especially as more banks have started using it? What upcoming priorities or regulatory steps is RBI considering to improve its interoperability, ensuring privacy and compliance?
So, you know, in this Q&A is reserved for students. With your permission, I am tempted to ask one question, and you can ignore it because the session is for students. A follow-up question, another question related to banks is the big banks. You know, there's a lot of discussion around, how big Indian banks should be. And many people feel that India should have more of big banks that have international stature. Within RBI, what is the thinking going on this issue? How many big banks you think will be adequate number for our economy at this stage? And given our aspirations of Viksit Bharat by 2047, that also requires our banks to have international profile also.
So the Mule Hunter is a project. So there's an issue, first of all, for us and for all of us, not only as regulators but all of you as well, which is the digital fraud. So all of us need to be aware and very, very vigilant and alert to these frauds. Most of these frauds happen when, number one, we are careless, we share, the credentials, OTPs, etc. Or we become greedy. There is a scheme, a lot of the frauds, especially in terms of value, a high proportion thereof is because of such kind of schemes which entice us to invest and garner huge returns. So this is of concern to us. Mule accounts helps in channeling this money and siphoning off this money. So we had our intermediate milestone was of 20 banks to adopt it. I think we are quite near it. It's in high tens. I mean, it's in high double digits. Over there we are well on target to achieve it. It has a good success rate. It will help over there, but apart from that, also we are taking a number of measures, including better coordination with the I4C, which the Home Ministry runs. This is something which we are constantly reviewing at my level, at DG level, as to how to improve our whole safety and security of the payment banks and the payment system. Big banks, well, we don't have a number really on the number of banks that we would like, as many as possible, and that will happen. That will happen as our banks grow, as our economy grows, which has been growing at this pace, and there are many banks in the public sector area, even in the public sector space, in private sector. The pace at which they are growing, I think it's only a matter of time that we will have a number of banks, quite a few banks, in the top 100 banks of the world. Thank you.
Thank you, sir.
Thank you very much, sir. Thank you especially for your generosity in terms of time that you have given the students here. You can see our students are very bright, very curious, very enthusiastic, and they still have a number of questions to ask. But we will do that in your next visit to the Delhi School of Economics. So thank you very much for your presence and your patience.
Now I invite Dr. Satyendra Gupta to deliver the vote of thanks.
Shri Sanjay Malhotra, Honorable Governor RBI. So, you have delivered a master class in financial regulations. So there were so many things to talk and obviously ask, and in 30 minutes or so you have delivered how you make regulations, what are the important things you are looking at, and how and what are the important things that are going into making the financial regulations. But important thing was, while explaining all these difficult things, you have been able to give many examples to explain these complex things, so that everyone can understand who doesn't work in the financial regulations. So I will not take much time. I will just give few examples that are related to what you covered in your talk. So one thing you talk about, that regulations need to be changed with time because times keep changing. So one of the example is when the former CEO of DBS was asked in Singapore, who are your competitors? Which bank is your competitor? He said, we don't have any bank that is our competitor. Our competitors are technology firms. And he said this thing around 20 years back. And now we see that many technology firms are coming in with the digital solutions, where they are providing the solution to the financial problems. Another thing, you talk about the cost and benefit. The thing is, there are two extreme views of looking at any financial regulation. One is, you can go the way that the Europe goes, where they are very particular about having regulations. They don't want to allow any new innovation until they are very sure that it's not going to violate privacy and many things. And then we see the results that innovation is very slow in Europe. On the other side is US, where it allows many innovations and the regulations comes next. So the cost is the volatility in markets and in the system. In US we see volatility much more, in Europe it's little less. So India need to adopt a balancing act in that. The last thing is, as somebody has already asked as well, is about the consumer protection in the digital world, where the cryptocurrencies are coming in. So it's a challenge. Again, it's about how the system keeps changing. The banks and the financial systems are changing. They are becoming more digital, whether it's a cryptocurrency, whether it's just a mobile payment, UPI. So things are changing, and probably we need more regulations, and we will see new regulations coming up in the digital financial systems as well. With this, I would like to thank you again for giving this wonderful lecture here, and thank you again. Thanks.
Thank you, Dr. Gupta. I thank our chief guest and our chair for their valuable insights. Thank you everyone for joining today's lecture. I request everyone to please stay seated while our dignitaries exit the hall. There is an important announcement for GSE students after. There is an important announcement for DSE students. In a short while, there will be a group photograph of the DSE students with Governor Sir in the DSE front lawns. Please listen to the volunteers and move to the front lawns in an orderly fashion. Thank you.